Welcome to the MHP Exchange Podcast, where industry veterans Frank Rizzo and Eric Busuttil generously share their wealth of knowledge in their new podcast dedicated to the manufactured housing space. They tackle tough questions to provide valuable insights for those considering investments in mobile home parks. If you're seeking answers in the manufactured housing space, this podcast is your go-to resource.
We're back on the MHP Exchange Podcast. I'm your host, Frank Rizzo. Joining me as always, well, not always, but 98% of the time, my partner, Eric Busuttil. How are you this morning, Eric?
Doing good today, Frank.
Great. Glad to hear it, Eric. You look very chipper, and I'm excited because we've got a very, very exciting program today. We're being joined with a very special guest. He's an owner, he's an operator, he's got a great story of how he even got to this point, which is really, a true success story. And we love hearing that. Right, we have Glenn Yaney from Vertical Equity Partners joining us today. But before we do that, before we introduce Glenn, if you like the content you hear on this program, follow us on Spotify or iTunes. Like it, share it, give us a rating. We'd love to hear that, and we'd love to hear your feedback. But we're going to have on Glenn Yaney. Glenn and his partner own and operate over 450 units in the Florida market. He is the host of The Millionaire's Journey, and he's really going to share his insights on how he got to this point and how he scaled and grew his business. I want to give a warm welcome to Glenn. Thank you for being on the program, Glenn. How are you today?
Thanks for having me, Frank. Yeah, so I'd like to just start out by saying is that if I can do it, anybody can do it. And it's one of those stories I was telling Frank. I started at Red Lobster. I was making about $1,500 a month, decided to get my real estate license. And, working at Red Lobster was the driving force to make me work harder. Like anytime I would have a bad night at work, or it would actually make me work harder in real estate. And so I got into, showing rentals, and it originally started with showing houses, and I couldn't actually get I couldn't get buyers to put anything under contract because there were so many institutions buying all these properties.
Sure.
So I ended up, pivoting from working with buyers to working with renters. And I ended up finding, every week I would place about 5 renters a week in a house, and I would get paid about $200 per unit. And what I ended up finding is a company named American Homes for Rent. They were paying about $1,000 a month or $1,000 a lease, and I ended up getting tied in with them and started showing a bunch of the rentals. And my first month with showing a bunch of the rentals, I made $15,000 that month. And within 2 months, I was recruited to work for them. And at the time, whenever I had the job, I thought this job is only going to be like a 6-month long job. They only have they had 200 vacant units right now. They got to lease them all up. Once they lease them up, we'll be able to, they're not going to need me. And so long story short, that company ended up growing from, when I started the company, it was 5,000, and they got to 55,000 houses.
Wow.
And yeah, so with that, in 6 months of being there, the same thing I thought was going to happen actually did happen. And there was 10 agents, and they actually let go of 7 of them. And there was 3 of them left, and I just happened to make the cut. And so what ended up happening after that was the 2 other agents ended up quitting or leaving. There was a lot of work, a lot of stress, and I ended up with 120 listings in my name, just showing properties. It was pretty wild. So I lived like I worked on at Red Lobster. I continued to keep my expenses very low, and I put away this money, and I ended up, my first property I bought within a year of working there, I ended up buying a condo for about $50,000, and it really didn't make any money the whole time. I ended up having my parents move into the condo because they were renting an apartment at the time. I let them move into the condo and, didn't want to charge them anything extra. So I gave it to them at cost. And I ended up, what I did is I moved from property to property, and I would get financing, move in, rent it out, and then move forward with that.
Mm-hmm.
So go ahead.
No, go on. Go on.
Yeah. So from there, I ended up meeting somebody while I was at American Homes for Rent. He owned mobile home parks, but I didn't know that when I first met him. He was actually trying to lease a house for his a significant other, family member, and so he was leasing this house, and I was getting all of his financials, and I saw that he was making about $60,000 a month. And I thought that was the most money I've ever seen anybody make that was renting a house from us. And so I started kind of drilling in a little bit, finding out like what he's doing. And he ended up telling me he owned mobile home parks. So then I started kind of prying to figure out more. And long story short, he became my first like mentor when it came to real estate investing. And he had I would just, on my days off, I had Tuesdays, and I'd had weird days off because I'd work through the weekend. So I'd have like a Tuesday and a Thursday off. So on those days, I'd call him and say, "Hey man, what are you doing today?" I'd just ride around with you. So I rode around with this guy that pretty much managed all of his mobile home parks in a small area. It's a Plant City. And he had about, at the time, probably 600 to 1,000 units that were that he managed, and now he's up to 1,400. Wow. And they're all in one area. So most operators you see with 1,000 units are probably spread out over a big area. This guy has them all in one area, and he still manages them today. And we talk regularly. And his first park that he ever bought was a 3-unit, and then the second park he ever bought was a 9-unit. And he ended up selling me those 2 units, seller financed. And that's how we initially got into buying mobile home parks.
So it's funny because, we've talked about this. We just had a program about somebody talking about, you got to find somebody like to kind of mentor you along that way, especially when you want to get into this space, because there's so many different nuances to it. Having someone kind of guide you through that process is probably so key, right? Because it's, not that you're not going to make mistakes, and not that person's still not making mistakes, but at least you can kind of learn off of the person that's there before and not make some of the avoidable mistakes, if that makes sense, right? I mean, how important was that to your process, do you think?
It's huge. And I was just thinking as you were talking that when you and I had the conversation, you were on my podcast, and I just think just with an hour of talking to somebody that's, I believe you guys are about 3 times bigger than what we are. It's just like you pick up small little nuggets through having these conversations with people that are a little bit further along, and it actually pays. Like, doesn't matter. It's like turns into where it's infinite amount of return. It doesn't, just having that person that's been a little bit further than you. It's such an important key to success.
What I always find so interesting, Frank, is, how we ended up in this space, right? Because there was, so many different, you could have went into, Airbnbs, you could have did flips. And that's what people find interesting when I have conversations with them, because, especially because of where we're from, there's nothing here, home parks, right? So, so interesting how you ended up in that space, right? And would you say it's probably because the mentor that you found was in that space, or, how is that? That's what I took from what your explanation was. Just you ended up in that space by accident.
Well, I think that a lot of it has to do with savings rate. I know that sounds very cliche, but I was saving money, and when the opportunities come, you have to have the funds to operate, so if you don't have these savings, and say, like, this is the thing that happened for me, is like, I was, for the first 5 years at American Homes for Rent, I was maxing out my 401k. IRAs. I got married in the middle of that. I maxed out her IRAs and, got 100% of her pay went straight to her 401k. Like, we didn't live off of her income. And what I had found is that at the end of that, I'm thinking, how do I get out of this rat race of just constantly putting money out? And what I have found, if I put it into a 401k, you're not really getting that until you're 65. So then I pivoted my investing to, I did the match at work, but I started committing 100% of my income towards income producing assets that pay me today. And or pay me today, or will pay me within the 3 to 6 months of me purchasing it. And it took me about 2 years of pivoting that mindset to become financially independent, because I was trying to save constantly and putting all of it into a 401k. And I found that it kind of was slowing me down from growing to where I really wanted to be.
So I want to pivot, because you mentioned this and you briefly mentioned this, but you've mentioned this to me before. You have a partner, right?
Yep.
A real estate partner, that you're working with, a gentleman by the name of Garrett. Like, how did that evolve? Like, where does he come into the picture? And then how did you guys decide to get into this together? Like, how did that evolve?
Yeah, so just like the other mentor, I found I actually met Garrett. Garrett started in 2009 flipping houses, condos, and he was very creative. He owns a piece of property out in Ohio where he plants Christmas trees, I call them Christmas trees because I'm from Florida, but they're maple. I guess they're maple trees, I guess is what they're called. But he sells Christmas trees, and he was very creative. So I just immediately thought, I'm like, this guy knows something that I don't. And we started talking, and me being in the property management, I started talking to him about his operations. And he was one of the guys that I would take on my days off, I would call him and say, hey, what are you doing today? Let's meet up. And I would drive some of his properties. He had about 20 to 30 units at that point, and he was financially independent. And I was looking to see like what he was doing to get there. And I also followed him. So long story short, we, I bought these 3 units, the 9-unit mobile home park. And then we actually found a 25 unit, and we syndicated it, and it was an apartment complex. It was more of a mix of duplexes, and there was one apartment complex attached to it, but it was 25 units. And we syndicated that. We raised like $700,000 to buy a property for, I think it was 1.6 million when we bought it. And so we bought it, and in the meantime, I own this 12 units of real estate of mobile home parks, and we're kind of seeing how it works with these apartments, and it was just so easy to manage these lot rent properties, as in like no maintenance. It's more predictable, the expenses. So we're like, well, how do we buy more of these? We ended up, and what I could tell you is that the way we looked at mobile home parks at that time is we looked at it, and we still kind of do, is look at it for the land value. We buy it based on what it would be for land, and we end up getting the infrastructure with it, so it pays for the land itself. So we were buying sites for $30,000 or less for mobile home parks, and they were just pretty much cash cows. And it was we're paying $30,000 for these mobile home parks compared to buying these apartments that were going for like $100,000 to $125,000 for not nearly as much revenue for dollar for dollar.
Are you you're also only in Florida, right? Which I guess that was your mentor's model, or
yep.
Are you managing these yourself, and is that why you're only in Florida? What is the reason there? I mean, we would love to only be in one market, but it's obviously difficult to amass, 1,400 units in one area.
Yeah.
And you're doing the same thing as your mentor did.
Yeah. So we're open to going to other markets. There's a part of me that says, Florida is in like what California was in 1970. So you kind of like you're riding a wave. It's like you don't want to go. It's like the real estate here is like why it's like me and Garrett have young kids as well. So traveling, isn't really exciting to me. And, we're financially independent, so we don't really feel the need to get on a plane to look at a mobile home park. But what I would say is we are open to it, but we're building out our infrastructure here, making it right. And then eventually when we get a full, right now we're actually in a Tampa MSA. We're not really, it's not Florida. It's about an hour within Tampa, everything. And we're open to further places in Florida. And I think as we build, we'll be able to have the infrastructure to support, buying it outside of the state. But for now, we enjoy our lives, and we choose not to make it more difficult than it has to be.
That's the whole goal of financial freedom, right? To be able to pick out a path, get what you want to do, and be able to dictate where you want to take your business. And just to go back to this, because I think this is an interesting point. We've talked to operators, and I know, we know operators who are solo operators, and we know partnerships that have worked really well. For Eric and I, we've been partners for 12 years now. And it's funny, we did a disc profile, right? And I don't know if you've ever done that, right? So turned out that I was a high D, high I, and Eric's a high S, high C, which is just so crazy. And he's such a high S, high C, if anybody is familiar with that as soon as we took the test, his first response was, let's take this test again to make sure the numbers are right? Because that's him, right? Like he's, and so I bring this up, and I talk to other people who have partners on that. Like, how do you, not step on each other's toes? Like it just, for us organically, we just know where our strengths are and our weaknesses are, and we fill gaps for each other. But how did you guys evolve into that? Where you guys weren't stepping on each other's toes, where now you're able to have like a real functioning, profitable business? Like how did that happen?
So Garrett and I, we definitely are different. I'm more of an operational type guy. I've been told about the test you're talking about, and I've been have somebody that keeps encouraging me to do it, and I still need to do it. But so I'm totally like an operational type guy. Garrett's a deal guy, and I'm more into the details, and Garrett's more of just he's way better negotiator than I am, is what I would say. So he's in charge of finding the deals, locating them, and then I go behind them to underwrite them. So. And the other question the other thing me and Garrett talk about is, and I told it to him right when we started, I said, hey man, we're going to probably have arguments, and I could tell you that we're going to disagree on things, but I can tell you that as long as we don't get in our own way, we'll become very successful. And in the end, these arguments that we have are going to be very negligible compared to what we're dealing with today. I mean, there's the stuff we argue over is, do we put a certain type of gravel down, or do we put crushed asphalt? It's like, are we gonna really fight over this, or are we just gonna figure out the best option, move forward? When it comes to we have growing pains as well, and I would say that communication is key for everybody, investors, your partners, the people that work with you, your team, and those are the big things that every time there's an argument, it's just a lack of communication.
Listen, I got to say that anybody who sees like Eric travels with Eric and I, we will constantly bickering over things, same thing, just about, we have the same goal. It's just how we want to get there. But it's always about we're both passionate about getting to where we want to go, and we have our points, and I know, but I have complete trust he's doing what he needs to do, and Eric has trust that he knows that I'm going to do what I need to do to get us to the finish line. And I think that's probably one of the reasons why we've been so successful. It's only about the issue. It's never a personal, attack on anything. It's more of, hey, like you said, whether it's gravel or asphalt, how can we save some money? What are we looking at here? How that aligns with the long-term plan. And that's so key in having, I think, that successful relationship, which is fantastic. I always like to hear how that kind of evolves. So talk to me now, talk to us now, what's next for you guys? Like, where, you're syndicating, right? Are you still syndicating? Are you sourcing what kind of deals are you looking at this point?
Yeah, so we're closing on an RV park. We are open to RVs. We started buying. We have a couple smaller RVs, but this is the biggest one we've looked at. We have most of our RV parks are 20 to 30 units, and this one is about 57. It's actually, we're open to RVs. We found that they are actually in my opinion, the most affordable way of living because you're literally paying for RV lot rent compared to mobile home lot rent. But, it's more transient, but you can kind of put things in place to make them more of a fixed structure, as in long-term leases, and then maybe sprinkle in a little bit of, the short-term leases to increase the revenue. But yeah, we like RV space. Mobile homes are great. Our goal is to, we believe we're going to double in size pretty quickly. I would say in a year from now, we'll probably be close to 800 to 1,000 units. And our infrastructure is at the place where it's at a turning point. So we had to restructure our property management to take on more, accounting to be able to handle. We're currently at 30 accounts, and if you're at 1,000 units, it's like these accounts just get out of control. So you just have to have things in place that something you didn't have to worry about when you had 200 units. Now you're getting to the 500 to 800 units. You have to have a stronger foundation to have the bandwidth to handle it, because you just don't want to miss the details. The details are still very important for us, and that's how you save the money, is through the details.
100%. I mean, it's this is a business of nickels and dimes, and you have to watch your nickels and dimes,
Yep.
Right? Otherwise, the business doesn't work. So, how are you sourcing capital now? Are you raising? Are you syndicating? Are you how are you doing that?
Mainly syndicating. We put our own funds into every deal that we do, but we also raise the money on the side. And depending on the size, so if it's a small park, we like small parks. A lot of operators focus on the larger parks, but we'll raise debt to buy the smaller parks. But when it gets to be a larger park, we'll generally raise equity. Just because it's just the underwriting, the expenses that it costs. It kind of it is beneficial to the debt investor to, invest in, to get, their 12 to 13% preferred return on their promissory notes. And we, for the larger deals, it's, equity is, that we attract more investors as well with the equity.
Great. So what's next for Glenn and Vertical Equity Partners? Where can we see you guys next?
Yeah, so I really enjoy the content side of things. I like to get on the podcast to talk to people. The relationships that we're building, continuously, looking for more deals. But meeting the guys like you, Frank, I don't know if we would have met if I didn't have a podcast. But I feel like when I meet certain people, I just feel like I'm inspired by the people that I'm interviewing, just because they're living a life that sounds like it's where I'm going, and I love talking to guys like you, and yeah, I mean, overall, back to the other question you said about with mobile homes and why we got into mobile homes is, that it's just like I was a terrible student. So, and what's happening with the real estate market right now, it's like we didn't get in our own way because we were buying these properties with high interest rates before. Now interest rates are high for everybody, and the mobile home parks are still holding strong because we focus on cash flow compared to the cash flow brings appreciation, but when you buying strictly for appreciation and running on negative cash flow indefinitely, it's just a model that doesn't work. And I can tell you that these some of these operators that are doing like the big apartment syndications that are running into these issues, it was basing it on appreciation, these purchases. And I'm grateful that we focused on cash flowing assets that we're buying for land prices. And I don't think land's getting any cheaper. It could take a little bit of a dip through higher interest rates, but I think that the cash flow will always, it's there to support it. And we're offering affordable housing to people that really have no other, this is like one of the only options for some people to live,
Well, you tapped into a great market, affordable housing. There's nothing more affordable than MH and an RV. So we definitely service a need. You've got a tremendous story. I mean, basically starting from, Red Lobster and just grinding. I mean, and that is the true American success story. You're grinding and you got there and you scaled, and now you've got yourself to financial freedom. You're doing fantastic things. Where can everybody reach you if they want to hear? I mean, and you got a great podcast, the Millionaire Podcast, but where can people get in touch with you, Glenn, if they want to find out more and track your progress?
Yeah, so I'm on LinkedIn, I'm on Twitter. It's hard for me to stick to Twitter just because it's so, you're just trying to get clickbait. But what I would say is with LinkedIn, I feel like that's where the real good content is. A lot of good operators are there. I like to read their stuff, and I'm on there regularly. And then I have my podcast. It's the Millionaire Journey, where we pretty much talk about entrepreneurship and a lot of real estate.
So, Eric, any final closing remarks?
No. Great story. I love hearing these stories. I wish you a lot of luck. And I'm sure we'll see each other and talk again. And look forward to seeing where you go with your company.
I'll be at Seco when Frank's there. He told me he's going, so I said I would go too.
Perfect. So we'll meet in Seco, and we'll definitely grab a cup of coffee or something. So I'm looking forward to be there in September. This has been another episode of the MHP Exchange Podcast. I want to thank Glenn Yaney from Vertical Equity Partners for being part of this program. If you've liked this content, subscribe to the MHP Exchange. Give us a rating and review on Spotify or iTunes, and check us out on Trailer Park Turnaround. You can watch that on our YouTube channel. Until next time, Frank Rizzo from the MHP Exchange. Thanks again.